Good afternoon, traders. Welcome to the New York webinar. This is our regular New York webinar that I'll do for my traders. I do 2 webinars daily, London Open 8 a.m. and New York Open 8 a.m. That's New York time and London time. Don't ask me what time is it on where you live, because I don't know where you live. You can Google it. I get a lot of questions, what time is it where I live? I don't know that. You can Google it and you will know what time it is where you live, right? So let me take the time to thank you for coming here. I'm always glad to see so many people in the room. And let's start. We have news coming up in 30 minutes. So what we're going to do is we're going to go through some of the charts pretty fast, the ones I think that are interesting, that we can look for during the news event and look for some trades there. So let's start with all the majors. Dollar index. Dollar index, if you were here from the very start of the week, you would know we're looking for a downside, and we are getting the downside. So far, we would still don't know whether this is a corrective structure or whether this is the start of a downside, because it's coming pretty fast. So this could be the start of a down move, or it could be a corrective structure. We would know that if it breaks this pattern here, if it breaks this trend line. But for now, it's a downside trade, right? No big deal. Let's go. Euro. Euro, if you would remember, when you came in, Euro was going down. Some of you came in the room the first day. Euro was literally going down, right? We were going down here. And what I said, I am not interested in the downside. I'm interested in the upside in the Euro, because Euro will go up. It's in a corrective structure. So you can actually say you know how structure works now, right? It was there. We were expecting this to go up, and it's going up very nicely. So Euro, I'm still looking for more upside in Euro. So the news comes out, we will probably see more upside in the Euro. So we have a buy setup in the Euro. We had some buy setup this morning. If you didn't get the Euro, because the Euro itself didn't have a perfect buy setup, to be honest, right? But the Euro pairs had very good buy setup. And if you were here from the very first webinar we did, there were 4 trade calls I made in here that I told you that were wonderful. That is the Euro Oz, Euro New Zealand, Pound Oz, Pound New Zealand. Those 4 trades, I said, focus on them and you will make money. As a matter of fact, a lot of you did. I was surprised of the amount of people who wrote me and tell me, thank you, we made money in that trade. And actually, a lot of people send me their account. One guy even doubled his account in those trades. He literally doubled his account in the trades, and he sent me a snapshot of it. And amazing. Well done. So what we're going to do now is we're going to look for upside. If this continues to go in 30 minutes, we may not get the trade. As a matter of fact, we could get a pullback during the news event, right? Because we wanted to either break out when it gets to the stop, breakout. But we have a chance if they don't go before the news event, which means if from now to the next 30 minutes they stay in here, we can put an entry order above here. And if this takes off, it is likely going to break out of this trend. So we will be in the trade, right? That's an option of how we can trade this. If you're already in the trade, you may want to move your stop very tight, because news events are volatile, which means they can go up and they can go down, and they can take your stops out and then go in the direction you wanted them to go, right? NFP is still tomorrow. That's far from now. We're talking about the news in 30 minutes, which is the unemployment claims. That's the most immediate news that may have some effect in the market, right? Let's go. Next one, Pong. If you were in here also on the starting of the week, you would know I was saying I'm not interested in the sell in the Pong. I'm interested in this Pong going up back to the upside. Now there is a change. I said if they break this low, that could change the structure. Now they've come to the low, they've put a wick under the low. That hasn't technically changed the structure. For this structure to change, you need a correction. We need a very big corrective structure in here. And then we would look for a very, very strong move to the downside. If we don't get that, what could happen during this news event, or even during the non-farm payroll, is we could get a reversal and a C wave to the upside. Now, whichever of those happen, we're going to have a very big trade. First, we want a correction, which means we can trade the correction to the upside. It's a corrective structure, but it may have a lot of pips in it, a lot of movement that we can trade, a good risk to reward trade in it, right? So they've moved down quite a lot. We have divergence in this chart between these two, and we can look for a reversal point here today, right? If the news event is negative for dollar, we can watch the reversal of the pound. what I would do to trade a reversal upon, I would put an entry order. Normally, if I'm trading it technically, I would want this to come up, I would want it to pull back, and then I will start trading it to the upside. Remember what I posted in the Euro Aus and the Pound Aus. Let it make an impulse, let it correct, and then we trade it. Right? I would not be involved in it here. But because it is a news event, if this thing is going to take off and if there's a sharp difference in what they're expecting and what they get, we could actually have an entry order in here. But since that's a very far place from where price is to put an entry order now, what we can do is we can go on the lower time frame, probably the 1 minute, the 5 minute, watch for the reaction, wait for a pullback within that short time span, take the trade, put a stop, and see if the momentum continues. So what we are trading is not the news event. So if you're going to quote me anywhere and said, well, he was trading the news event, please don't quote me. Listen very carefully. I'm trading momentum during the news based strictly on the technical trade that I'm looking for, which means if it is going to go up, I'm interested. If it is going to go down, I am not interested. I will not trade it if it's going down because I don't trade news events. But during news events, you do get momentum. And if the momentum is in the direction of the trade that I'm looking for, I will trade it. That's a huge difference. Right? So please, I know a lot of people like to quote me there and well, he said this and he said, and half of those things I never said. Honestly, I never said some of those things. But I'm not going to comment on them because that will start a war. Right? Avoid quoting me that I said so because most of the things you guys are saying that I said, I never said. Honestly, I'm being very honest to you. So please avoid doing that. If somebody wants to know what I say, the webinars are on YouTube. Go and look at them. If they're too lazy to look at the webinar, you don't have to tell them what I say. Right? I would not answer to a lot of those questions because if you want to see how and what I do, you have the opportunity to come here or to watch it on YouTube. If you don't want to do either of two, you can send me 100 questions and you will not get answer to it. Right? Because if you just want to be spoon-fed on the time when you're hungry, right? You don't want to gather the food and cook it. You want when you're hungry, tell me, should I buy now? No, that's not how it works. You have to put some energy and you have to do some work. And the least you can do is at least come to the webinar or watch the recording, right? Some people will wait until you post the charts and then they should I buy right now? Should I? No, that's not the point. I repeat, when I post a chart, I'm not giving you a buy or sell signal. I'm giving you a sense of direction that I think the chart is going to go. Now, you have to have your own strategy how to trade that. And if you look at the webinar I taught you before, you must have knowledge. Based on that knowledge, you create a strategy, and then you can trade it. So, guys, avoid doing that. Avoid asking those questions because I will not answer to them. And if I do answer to them, then we start having trolling in the charts. Right? You guys have seen that before. I try to avoid doing that. That's what I like. I like the community and I want to keep it clean. So I'll be looking for the upside here. If it goes, I'll take it. Aussie, on the other hand, is going down. And that's normal, right? You know, a lot of people said there are correlation. Well, there aren't any correlation in the chart. Zero. And I will prove it to anybody that there is no correlation between any charts. Absolutely none. It doesn't exist. If you want to know whether you have correlation or not, here's what you do. Go to Wikipedia, find out what is correlation, read up about correlation, understand that it's a mathematical topic, and you have a mathematical formula to calculate correlation. Correlation means if two things are correlated, if one changes at a certain percent, the next one will change equally, either negative or positive, depends on what the correlation is. But you will have an equal amount of movement every time. Whether it's 1 to 1, 1 to 2.1 to 2, 1 to 3, 1 to 1.1, or whatever the correlation is, you have a fixed correlation, and whatever that one moves, the other one will move equally based on the correlation, and you can calculate that movement. If you can't do it, then the charts are not correlated. How simple that is. It's not difficult. When you hear something, I saw a guy draw a chart, and one chart is going like this, and it goes there. The other chart is going like this. And he said, well, they were correlated in this piece, but then they ran off. No, they're not correlated. You're showing that they're not correlated. And you're still saying the nonsense that they're correlated, right? Yep. Thank you for posting it. You guys have to get it. These things, if you want to become a trader, you have to work with things that are based on knowledge, not hearsay, they say, I say, them say, nonsense. It has to be based on knowledge. You're in a job, you're working. Whatever you're putting out there has to be based on knowledge. Don't just take it for granted. People say something and, oh, yeah, well, he says it's correlated. And he's showing on the chart that they're not correlated. If you look at it, well, there's no correlation there. And he's writing about it. And he's like, yeah, they were correlated. So I'm expecting this one to come back and meet that one again. Even if they come back and meet each other, they're still not correlated. That's nonsense. Absolute nonsense. And it's based of ignorance, not knowledge. So you guys, if you want to be good traders, you have to learn these things. So please don't, when you hear people say that, and everybody supports it. If I only go and write that is not so, that's Warren Trading View. Everybody, what he's talking about, he doesn't know what he's saying. Go look it up. It's easy, right? We have news in 15 minutes. This one, we're looking for downside, not upside. Remember, we talk about it. If it breaks this pattern, it's going down. But there's one thing with it. It's been going down all the time. So I will not be surprised if they reverse it for a corrective structure and then go down. So any trade you were taking in this had to be 15-minute trades. We talk about that very early. They have to be based on a 15-minute chart. Now what I want to see a reversal. I want to see a corrective structure, not a total reversal, corrective structure on a daily, a 240 or a 1 hour. One out of these three, corrective structure. Then I would be looking for a bigger trade to the downside. Right? So maybe we'll stay out of this one. The ones that are set up to go are the euro and the pound. Did I miss something? 1:30 hours for the what? The news event? I think the news event is 4:30 my time. That is in 15 minutes. Is that correct? Is that what you're talking about? How long is the webinar? Somebody's asking. I could do this for 24 hours if you want. By the way, Zach is my trader. He knows what he's saying. He's kidding. Let's go. We're interested in a bounce of this one and a reversal. We have divergence. On a 4-hour, we're hitting the trend line. And at the start of the week, we said you can trade it down to the trend line. Not the best trades, but you can trade it on a 15-minute. Now it's on the trend line. Two things have to happen. It could break or it could bounce. Right? So what you need to do now is watch here. If this thing breaks, you can put an entry order under to go. Or you can trade it in the breakout and the pullback. If it bounces, we'll wait for them to break this trend line. Let them break the trend line, and if they pull back, we will be in the trade to the upside. And you can do that in a 5-minute or in a 15-minute if you're doing it during a news event, because it's faster. The momentum is much faster. Normally, I will do that only in a 1 hour if it's not a news event. We can only trade one during the news event, so you guys will have to decide which one chart you want us to look at. I'll go through all of them. Swiss correcting, and we were looking for Swiss to come back to this. If you remember this chart, we're looking for an ABC pattern. We don't have divergence, so we'll watch it when it comes back here if they're going to make one more up or they're going to break. It's a downside. So if this goes to the downside, it will be a very nice trade. All we'll have to do is put an entry order under here. Price is closed, so if it breaks, it's okay. When it breaks and it take you, and you'll put a stop here. When you're taking in on the trade only and it's going, you can put a stop above here. These trades are high risk, very, very high risk. They could take you and come back, take you out, and then go. So if you don't have the confidence and you don't know how to handle these trades and you can't take a loss, don't do them. I normally don't do them. I hardly do them, but it's a methodology that you can trade. Some of my traders use it. We use it very rarely, but we do it sometimes if we have a very good setup. But it's how you can trade in the news event if you want to catch the momentum, right? So they're good in that if you do it every time, your win-loss ratio is good because you get 5 to 1, 10 to 1 on the risk to reward. If you don't do them every time, it's not going to work good, right? And now we're going to do the CAD and yen. Only the majors we're going to do. CAD finally hit the target we wanted it to hit. That's the 270. If you were here from the start, you remember we said they will try to get to that target. And when they get, we will see if we have divergence. We really don't have divergence internally between these two, but we have higher time frame divergence. But at this point, they will talk to us. That is the monthly 270 target. That's the monthly target. If you're looking at the monthly fib, this is the monthly target. We are on the target on spot. That is this one. We're hitting it. And at this point, I think we could see a pullback to the downside. See, we have divergence here in this higher time frame. So I think we could see them pull back either probably to this trend line and then one more up, or we totally go down. So we could see a reversal or a pullback in CAD. I'm interested in this to the downside. I'm very much interested in CAD to the downside. So what I want the news event to do is I want the news event to bring it down like this, break this channel, that small channel, pull back, and I'll probably sell it here for the downside with a stop above there. Right? That's the plan on CAD. Yen, CAD was going up, yen was coming down. Right? CAD yen was a good trade if you were trading it. Remember, we looked at CAD yen. Yen is almost the low. We have divergence. So I think maybe we'll get a pullback. I'm looking at least for a pullback, not a reversal, because they will still come to this target. If they're going down, it's a good trade. If they're going up, a more risky trade, not such a good one. So to the downside, let me take this out. You can put an entry order under the low here. You can take this out if you want right now, because during the news event, those lines will have zero effect. Fibs will have zero effect. You can put an entry order on the low, and if they break and they take off, this is where your target is going to be when they break this line. So yen to the downside is a good trade if it goes. Euro pound, we'll leave it. We finally broke, we'll leave it. The other trades we can look at is Euro Aus. This one is going. My traders, we're in this one. We took this one this morning in our trading room right here off that trend line. We didn't take it off the trend line, but that's where we take it. There were different reasons why we took it. But we took it in here in the room, and all my traders should be in this one, right? All of them who took it with us in the room, we took it live, right? Euro New Zealand, we didn't take this one because this one didn't have a perfect setup. As a matter of fact, they had divergence in it. So we opted for the Euro Aus, which is a good one. This one is still going. So if you're in this trade, you're doing well, right? Watch it when it comes here. If they break that up and they still go and we don't have divergence, we're going for those big moves, which means we can still get in. We will be going for the bigger moves, and that means we can still get in on any pullback. You can still get in on any pullback. If they take off like a rocket, we're in the Euro Aus. That's okay. We don't have to be in all of them, right? Euro CAD, we're not in this one, but it's a very nice one if you're taking the break here. I spoke about this in the class. If you took that, it was a real good trade. For the webinar, for the news, we'll skip it. For the news, we'll look at Pong Aus. Pong Aus is still going. A lot of people still keep asking me when to enter, when to enter. We already said in the webinar where you should enter. Every pullback you should get in the trade if you want, right? This was your entry. If you didn't get that entry, you had an option yesterday when it broke. We talked about this when it broke, and it broke this. Let it pull back to about this level, and you can take the trade somewhere in the middle here. If you took the trade somewhere there, on the 1 hour when it pulled back, your stop was supposed to be here. So you're actually in a good trade right now, right? You're in a good trade. That is a trade that is supposed to. That's a trade we were looking at yesterday. And if you keep asking me where to enter, then there's no sense. You didn't look at the webinar, right? Pound New Zealand. This one didn't. If you took this one, you probably take a loss because this didn't work good. As a matter of fact, there wasn't a trigger. When it break here, they reversed immediately, so you didn't get a trigger. But if you don't remember what I said, the tree sideways, if you didn't remember what the trigger was, you took a loss on this one because this one came lower and now it's going up. So you can ignore this. We would ignore this and don't worry with it, right? CAD, if you took this, you're still in it. I'm still in it if you take it. And I'm not really worried because it's just making a deeper consolidation, something we anticipated, because this one is a longer term trade. And once it's making consolidation like this, they're going to go. So if you're not in the trade, here's an option that you can do. It may not really move during this news event because if CAD moves and Pong move, it will not go anywhere. And the last one, Pong Yen, a lot of people are looking at for probably reversal. So we'll have to let it come back up, make sideways, and then get in. You can do that in the 15 minutes. Silver going up, nothing unusual here. Remember, we're looking for this. We can see them break out of this triangular pattern to the top here. And if and when they get there, if and when they get to that top, they break this pattern, I'll be looking for them to go up back to the top of this, right to the top here, and probably even break out. But I'm still anticipating that they will come here, don't break the pattern, come back down here, and then go up. I'm still anticipating that move. It may or may not happen. It doesn't really matter to me whether it happens, right? Because buying silver here, buying silver there, or buying silver here is the same thing. I'm buying silver for the longer run. So all of these are buy zones for me, right? And I'm already in the silver trade. Gold, if you're in the gold, you actually got more than you wanted. So all you had to do was move your stop, because what I thought they would do was break the stop and probably go down back for 1-1. Gold may be showing us that silver may not go down because gold is not going down, right? It's actually going up. Forget about these lines. I was just showing one trader how he can manage some trades, take them off. Yep, most of these lines are showing. So you can actually watch it. If they come down back, they will come with a very sharp move down and up. I'm not interested in the downside in gold, and I don't think you should be interested in it, because if they drop beyond this point, they will turn very fast back to the upside, right? If they make a drop, it will be short-lived. They wouldn't stay at the low. They will come back to the top. But to the upside, great. If you're not in it, wait for a correction. Wait for a 1-hour correction. You actually had a very small correction here. I wasn't looking at this. You had a correction here, actually. See that? I wasn't looking at this. You had a correction there. I mean, the trend line would be like this. Yep, you had a small correction there. So if they make a deeper correction to the trend line, you can buy. If they go sideways, you can buy on the breakout. It doesn't matter which one they do, you can buy. Right? So those are the charts. Choose one of those so that we can watch in. Six minutes from now, they're going to be news. I think it's better if we look at one of the majors. You guys could choose which one you want to trade. The rest of them we will look at after the news event, because we can't look at all of them at the same time. So 162 of you in the room. If you just click, if the first 20 people or 30 people who put what trade they want, I'm going to go with that one. The majority that we have. So Pound USD have 1, 2, 3, 4, 5, 6. We'll go with Pound USD. Pound USD is winning so far, right? You guys are a little slow, so we'll just go with the pound dollar. Everybody seems to be clicking on the pound dollar more. Aussie has 1, 2. Let me see, 3, and Aussie is not an interesting one. New Zealand 4. Aussie has 4 only. Pound seems to be winning. I see Pound has more than the rest of them. The rest are spread out between different pairs. So we'll take a flash at all the pairs actually as they come along. So what we're going to do is we're going to go to a very low time frame. We're going to go to 3 minute or 5 minute. We would like to see this movement continue to the upside. We would like to see them spike. If they go down, I'm not interested. We'll just leave it, right? We'd like to see them spike out of this. And if they pull back, the 1 minute or the 3 minute candle should go up. And if they pull back in it, we could take the trade to the upside with a stop under the low, right? So let's do it in a 1 minute probably. We're trying to catch momentum in the direction that we like the trade to go. If it goes down, that's it. We'll just leave it alone, right? So we will decide if we're going to take the trade. Every one of you, if you're deciding to take the trade, let me warn you, trading has risk. I am not making a trade call for you. I'm showing you how I would trade this, how I would make this trade during a news event when there is high momentum, when there's volatility in the chart, right? I'm showing you what I would do. Now, whether you want to copy that or you want to do something else, it's up to you. I don't like the 1 minute charts, but the best, if you want to catch the early momentum, the best place to do it is on the 1 minute during a news event. Yes, you can ask any question at the end. We leave some time for question, don't worry. So we have 5 minutes more or 4 minutes more for the charts to move. And we'll wait and watch it. Maybe we wouldn't even take the trade. Yep, I can have my station up and running and do it. Let me put my station on. I'll tell you if I'm taking it. Maybe I wouldn't, but I'll tell you if I'm taking it. I actually like the trade to the upside. I can't tell you if to buy. That's a choice you have to make on your own. That's not something I can tell you to do. I cannot make a decision for any one of you what you should do. That's a decision you have to make on your own. I'm showing you how I normally do this during a very volatile market. If I do it, I don't do it very often. Yeah, we can do that as well. We can watch it and then we can make a decision. I'm not buying anything right now. We're in the 1 minute chart. We can't go lower than that. We're not looking when you're trading a 1 minute chart. You're not looking for an ABC or a 1, 2, 3, 4, 5. That's nonsense. We're trying to catch momentum. That's all. You guys were listening to me. I hope so, right? Because I clearly explained what we are doing. We are looking for a trade to the upside. If it was a normal, I would trade it in the 1 hour. But because if the news is going to support the moves to the upside, we could have very good momentum. So we are trying to see, are we going to take the chance in catching the momentum or not? Because the questions sound like you guys weren't listening to what I was saying. Yeah, most people are like, can I sell it? Can I buy it? Like, please listen. No, I'm not being rude. I just notice the questions because I very clearly, very slowly explain what I'm trying to do, and we don't do it. Maybe we wouldn't even take the trade. So don't worry too much about it. Here's the thing: you should not even take the trade if you don't know what you're doing. If you don't know what to do, just watch. Don't do anything. You're not gonna lose anything, right? We're just simply saying that if it's there, we will try to catch it. Okay, so in 1 minute we will know. Is Benny on? Benny is our news guy. He tells us he gets the news a couple seconds before us. Benny not. Benny in the room. Yes, Benny. Let us know what the news is. Positive, negative. Negative slightly, right? I think I answered that question. This is the only week. I conduct webinars daily for my traders, but I'm opening up the webinars that I do for my traders this week only as a gift to the TradingView community. It's a New Year's gift, 1 week free webinar. You guys have an insight as to what we do. Except when we do it in our group, it's much more fun because the microphone is on and the guys could ask me questions and all of that. Okay, no reaction. This is not all the reaction you have on a 1 minute chart. Bad idea. If that's all the reaction we're getting in the news, it's no good. So here's the idea. We watch it and don't do anything, right? Because the whole idea of trading a news event is that there is going to be very strong momentum. As you can see, the first minute candle did not give any strong momentum. So we'll go back to what we were doing, right? We will just leave it where it is, go back to what we were doing because there's nothing to trade, right? We will trade this technically. Technically, I'm looking for it to go up, pull back, and then take the trade. To the downside, I'm not interested, right? So let's go. Let's go back to what we were doing. We finished going through all the majors. We went through some of the crosses. So let me go through some of the crosses that you guys are interested in. I'll just go through every one of them pretty fast, right? So we did Euro, Aussie, Euro, New Zealand, Euro CAD. I think we looked at the Euro CAD. We actually looked at all the Euro pairs. If Euro CAD pulls back, by the way, and consolidate here, this is a perfect buy, right? If this thing pulls back and consolidate, then it could probably make a nice consolidation here. It's a very, very good buy. Remember, we're looking at this pattern to buy and to break. This was your buy if you bought here, right? If you're in that trade, you want to get it to positive. If you're not in it, wait for it to consolidate again and then buy. Euro Chief, it's still in this consolidation. Leave it alone. Euro Yen, a lot of people are asking. Euro Yen is breaking, by the way, so that's good for us. On a 15-minute, you can see we are going up. I know a lot of you probably already took the trade on this move, but you got to be careful if you take it. Nothing is wrong with that if you want to get very aggressive in trading, as long as you have the experience, right? What you got to be careful of is when, I don't know how far this is going to go, but when it's finished, it's going to consolidate. And when it consolidates, it's going to take off, and that is when I'm interested in it. I always want to see the first impulse, the pullback, and then they go, right? So here's an idea of what you're looking for. If you're trading this, and this is the top, you want to see the move down, you want to see the pullback, and then this is your trigger, right? That is your trigger to enter with a stop above here. So we're looking for the same thing at the bottom. Give me a move up, give me a pullback, and then give me a trigger to go up, right? Let's go. Pound Aus we looked at, Pound New Zealand we looked at, right? Pound New Zealand consolidating. If it consolidates long enough, we'll be interested. Pound CAD we look at. Let it consolidate. You can take the trade to the upside. Pound Chief broke. Finally, it broke. So we were looking at this from a long time back. I actually posted it, show what the patterns could probably do. So what you need to do now, if you're already in the trade, you're a little too early in the trade, right? What you want is a consolidation and then go, right? They always consolidate. They will always pull back. I know emotionally you're thinking, if you don't jump in now, you're going to miss it. Well, you're actually not missing anything. You had a small pullback here. It's a very small one. What you can wait for is at least a 3-wave pullback, 1, 2, 3. And then if you get in the wave here, put a stop here and see if it starts to go. It could be a much bigger consolidation. But in this case, I'm not anticipating a bigger consolidation, because this is more of the consolidation was this. I want to see some sideways move here on a 15 or a 1 hour. We have a 1 hour sideways. You can probably take the trade if you want, but you will have to use a bigger stop, not the small stop. You'll have to use a stop above here. The target is a pretty big one. So let me show you where the target for this trade is. Everybody asks me where the target is. The target for this trade is way down. Let me just take off all of this. We don't need them. The target for this trade is way down at the bottom here. So we'll go with a fib target, which would be somewhere around the 618 here. Right? So I'll put it somewhere here. When it comes to that 270, move your stop to positive. Strong positive. And leave it there, right? So I'm looking for a big move to the downside. If we complete an ABC pattern, we're probably going to have a much bigger move to the downside, right? Very big move. But you want to take it step by step. So we've got a move down, we've got a consolidation, we're breaking out, sideways move, and we're in that trade, right? So you can actually, if you take it here now, you just have to make sure your stop is here. If you want to have a better risk to reward, like I showed you, you'll probably wait for a bigger consolidation, break out of this, and now you'll put your stop here, your entry here, and you will have a better risk to reward trade. Can you guys keep your the questions for after, so we can go through pretty fast? Pound Yen, I told you what I'm looking for. Aussie, New Zealand, leave it alone. Aussie Chief coming down nicely. If you're in it, you're doing wonderful. Anybody still in this trade? Come on, a lot of you guys took it. Don't tell me you clicked. Okay, great. At least some people have the stamina to stay in. Wonderful. Well done. Keep it. It's going. Remember where we showed you the target is, right? The arrow is still here for you, right? And it's actually following the arrow. It's even moving faster than the arrow, because the arrow is slant and this thing is going straight. So your first target would be this blue line. That's the 270. Your second target will be the 618. Right? So well done. Keep it. And we had a troll in there telling us that he sees bullish engulfing candle in it, you know. I don't know where he see that. I don't see bullish engulfing candle. Well done. Very nice trade. So Good trade you guys take. Let's go. Aussie yen also moved. These were shorter terms, 15-minute trades if you were trading them. It's also coming down, 15-minute trades. You got to be careful. If you're in this one, be very careful now because very soon this one is going to make a deeper correction. I showed you guys the pattern, right? And it's doing exactly what we said this thing is going to do. So if your first time in here, I saw somebody said their first time in here. Let me show you what Elliott wave or what wave patterns look like. This is what it looks like. You can predict what the market is going to do way before it does it. Let me show you from where you can predict it. Those of you who are here the first time, you can go back and click on some of these charts. This was when the chart was posted. If you notice, this thing was in a sideways move going down. We thought it's going to come to the trend line. They didn't come to the trend line. They actually break out of here and go up. So let's click and see. This is an amazing thing with TradingView. You can click on the charts and see what happened, right? They went up exactly to where we wanted them to go. They come down and they're following the candle pretty fast, right? They're already at the low. Very soon, we're going to anticipate a corrective structure, right? Very soon, you're going to anticipate a deeper corrective structure. So be careful if you're in the trade, you want to move your stops. Very soon, you could have a very deep corrective structure. Don't take the trade off. Move your stops. And after that, you're going to have one more drop. Why I think that is going to happen? That is what they did here. A sharp move, a correction, it's moved down. That's what they did here. A sharp move, a correction, a move down. See? Very easy. So be careful if you're in this one. Let's go. It's there already, right? So can you forecast the charts? Yes, you can. Anybody who tell you can't has no clue what they're doing. Right? Let's go back to where we were. Aussie CAD. It's coming down pretty fast. We never got a pullback. We were looking for a pullback to get in. Actually, no. In the 1 hour, you had pullback. I don't trade this at all. I don't even look at it very much. But you had a very nice pullback here if you wanted to get it with a nice 3-wave correction in it, right? If you're looking at it, this would be an ideal place to get in. I don't think anybody took this because we hardly pay attention to that. New Zealand CAD we don't pay attention to, but you're breaking right now, and if you get a small consolidation in there, you can actually take the trade to the downside. New Zealand Yen, this one has been going down, and it's keep going down on smaller time frame. Right? Watch it when it comes to this low. I don't think they'll get all the way to that low. I think we may see it turn up faster than that, but keep an eye on it if you're in it. CAD Yen, we are coming to the low again. We are coming to this target. Put it in a daily so you guys can see. It's a weekly chart. Let me put it in a weekly. This was a chart prepared way back also. Way back when we were looking at somewhere in the top here, if I can find it. I'm not sure where it is. Maybe in a different time frame, a 2-day or a 4-day or something. But you can find it in TradingView. It broke here, and it's coming. We're looking to get here. I don't think they will go in one move. I doubt it. Right? So it means if we're getting a 4-hour correction, that's normal. We could have a 4-hour correction back to this level. You should be prepared for that. If we get a 4-hour correction here, you can take this trade. This is going to be an amazing trade with a 5, 6, 7 to 1 risk to reward. Don't miss it. You see this one here? Amazing movement, right? Don't miss this one. It will correct. And when it corrects, you want to be in that trade. This will take about a day or two, and then we'll get the trade, maybe next week. New Zealand Swiss going down. If anybody took this, I don't think we made the call, but I didn't take the trade. I'm not interested in this anyway. CAD Swiss. So this is coming down here now. We're going to hit this trend line, and then they're going to talk to us. This is a very interesting trade. You want to keep your focus on this one because of the pattern. Either this is an A, B, C pattern, and we're going to break out. If they break out, we will take the trade because it's a big trade to the downside. If they don't break out, if they don't break out of this, if they don't break this bigger pattern, which means they come here and they bounce, we will get a corrective structure, and then we'll trade this up here, and then we're going to trade that down. Right? We're anticipating a move up and a move down if they make a wedge. This pattern could do both. It could make a wedge, or it could make an ABC flat. We don't know which one is going to be, and there's no guessing in here. Let's see which one it gives us, and then we'll trade it. Swiss yen. Come on. Yep. Remember what I said? No sell at the low. It was at the low, and we said do not sell at the low. The only time you'd be interested in a sell is when it starts to do this. then you can take the next sell. If it goes back very fast and pull back like this, we'll be buying to the upside. And the buy to the upside is very, very possible. Silver, we looked at that. Gold, we looked at that. Oil actually tested the low, but it's not going. There's going to be a real problem from now. From now on, oil to the downside is going to be a real problem. So be careful. Natural gas consolidating. If you guys could trade natural gas, here's a trade for next week for you. If you can trade natural gas, it's a really good trade next week. When this consolidates and it breaks, take the trade and keep it for about 2 or 3 weeks, maybe even more. This one is going to be a really good trade for you. Right? It's very simple and it's easy to take. You have an impulse, you're getting a correction in here. You're going to have a breakout and you take the trade here with a stop here. And you keep it for 2 weeks. Risk to reward is going to be amazing. Right? That's about it. We're not going to do SPY and all of those, right? Because if we start doing the charts, we don't do for everybody. Somebody's going to want something else, and we have 174 people in the room right now. We can't do for everybody, right? But you have the concept. At least you have an idea of the concept of how we look at charts, right? Pound New Zealand we looked at already, but we can, let me see. Yep, we're looking at a buy setup on Pound New Zealand. The Pound New Zealand, Euro New Zealand, Pound Aus, Euro Aus, we're still looking for buy setups on them. Gold is going up. If it pulls back, buy it. If you want anything to do with the course, let's not discuss it here. Skype me. Add me to Skype. This is my Skype. You guys have a chance to take it. It's, let me put let me change the color in that. So let's go to the topic we wanted to do today. I'll leave the Skype number there, the Skype name. Add me to Skype and ask me all the questions about the course. Not here. Let's go. Let's not waste time here and talk about that. Natural gas I can trade. I don't trade. My traders trade it. Okay, so enough for the charts. The topic I wanted to do today so that you guys could learn something about trading is time and corrective structure. Since we're in the natural gas, we may as well do it in the natural gas, right? So you would have seen that some people use this methodology to count. If it's in this box for 3 weeks, it is going to be in another box for 3 weeks, right? And then it's going to expire time, and then it's going to go into another box for another 3 week or a 4 week, and then it's going to, what they're saying is a 4 week impulse, a 4 week correction, a 4 week impulse. But that could be very far from the nonsense, from truth. Let me show you how the chart moves. And remember this, I'll repeat this like 1,000 times. And I'll repeat it 1,000 times until you get it. The chart moves in an impulse, which is extremely fast, very fast, and then it will go into consolidation. This is a time factor game. And when it's finished the consolidation, it is going to make a very sharp impulse. The correlation or calculating the time that it's going to spend in here is a waste of your time because no one could calculate that. Remember, I've tested these things. And I've spent thousands and thousands of hours testing them, calculating them, writing them down. See if you can calculate. You can't calculate it. And there's a reason why you can't calculate this. Because you don't know what the corrective structure would look like. Would it be a wedge? And let me show you a number of corrective structures, what they look like. This is a corrective structure. 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 These two doesn't look alike, right? This one here is a corrective structure. That is a corrective structure. Look at this corrective structure here and look at all these smaller corrective structures. And here what happens. Look at the size of this corrective structure and look at how much it moved. It just moved that much and then it went into correction again. It moved this much and then go into correction again. It moved this much and then went right back, sharp correction to the upside. Right? You can't calculate. It's not something you can calculate. It depends on the pattern that it's making. What you can do is learn these patterns and understand what pattern it's making and know how to count the waves within the pattern. That's all. You can't. Let's take something that has a time in it. Take this. And let's calculate this going down. Put our box there. That's your box. So how much it takes? 17 days. So you're saying it should go sideways. If it comes down 17 days, it should go sideways 17 days, right? All you have to do is say, well, this was the correction. That's 69 days, my friend. That's 10 times it took to come down. And that is how it works. An impulse is a fast move. A correction is a time factor, long drawn out move. There is absolutely no correlation. There is no time factor. There's no time at the mode that is going to work there. It does not work. You can calculate it. Don't just believe things. Look at it. Test it. I could draw this to make it work. Here's what I could do. I could find the square boxes and put it like this. Let me just show you what I could do, which is incorrect. Where are the square boxes? We don't have square boxes in this thing. Do we have square boxes anywhere? Which one has the square boxes? Just draw. Anybody tell me very fast which one has the square box? I don't use those square boxes, so I don't know which one has it. Under the brush. Okay, let's see. Oh yeah, we have the square. Whoop, sorry, the wrong one. Let's take this one. You can do this and assume that if you do this, what you will do is you will put something like this at the side here. And you're going to say this is equal to this. And then you can fix it to make this one look like it's equal to this one here. And make this one look like it's equal to this one. And then you can do this one to make it look like it's equal to this one. This one is going up and that one is coming down. You can actually fix the chart to make it look like what you want it to look like. But that's not how the chart works. All of this that you're looking at, these are not impulses and these are not moves you should be trading, in terms of the impulse and correction, because you're in a corrective structure. That whole thing is a corrective structure. So put in some square box next to each other and tell me that one of them expires, so it's going to go down now. It's not what the chart is going to do. That's your imagination of what the chart should do, right? But the chart doesn't have to do that. Because the chart is in these are actually, look at even inside of this. This is an impulsive wave inside. This is the corrective wave inside. You see the difference between them? Let me just expand it and you can see it. These are the impulsive waves. These are the corrective wave. Let's put the boxes and see time. Look, this thing took, I think, less than 5 days. It's 3 days actually. 1, 2, 3 days. You can count it. And this one took how long? 29 days. That's the difference with impulse and correction. Impulse is fast. Corrections are slow, long, drawn out. No two corrections will be the same. Not in terms of time, not in terms of pattern. They simply wouldn't be the same. So when you see something like that, you have to understand what it's telling you. What is this chart telling me? Does that make sense to me? Is it really working? Okay, let's look at this one. And this was a correction that went sideways for how long? For 22 days. And then it went down for 1, 2, 3, 4 days. And 4, 5, 6 days is that this was the lowest. 6 days is went down for. Guess what the correction was? This was a fast pullback 2 days, and then they went down 3 days more. Do you want to tell me that you can calculate the time in which those things are going to work? No, you can't. You literally can't, because they're all different. What you can do is look at the structure that it's making, and if you understand the structures are limited. It's going to make a very simple ABC flat. Not like that, sorry, an ABC flat. It's going to make a 1, 2, 3, 4, 5, 1, 2, 3, 4, 5 zigzag. It is going to make a wedge, 1, 2, 3, 4, 5. It could make an expanding wedge, 1, 2, 3, 4, 5. I don't have to continue. Read the Elliott Wave book. It could make a number of patterns, and each one of those patterns could be very long, drawn out, or very short. You could have a very short wedge, or you could have a long one. Let me show you one chart where the correction took 4 years. PunCAD. Let's go to the PunCAD. This one is a learning lesson for my traders when they're learning chart patterns 1 week. We have to go to the weekly to look at this. You see this correction here? Let me show you it. This was the impulse. All of this was the correction. And then you have your another impulse. You want me to tell you how long this took? Let's look at it. This one started in 2010, August the 2nd. See that? I think the 7th is the month, right? Actually, this one, August the 2nd. It ended 2013, February the 25th. That's about 3 years that thing took to go sideways. How long it should go up? 3 years? Let me show you how fast it went up. In less than a year, 350. See? And the speed with which it's going up and how it's going to go up has nothing to do with this. Absolutely nothing. Just nothing. So you can draw how much square boxes you want in here. They will have no relationship to this going up or to this little piece at the bottom here. The same thing here. What you can do in here is if you understand patterns, you can do this. And you can see the patterns you're making. You made a 1, 2, 3 down. You made a 1, 2, 3 up, and you made a sharp move down. This is one structure. 1, 2, 3. You made a 1, 2, 3 up. 1, 2, 3 up. So you're making another structure that is similar to this structure. 1, 2, 3 down. Within this one, you notice we have a 3 wave here. You had a 1, 2, 3 wave here. Simple. Very, very simple. If you know structure, you understand what you're looking at. That is why when we look at this one, we have a very clear idea what we think it's going to do because we understand what structure looks like. Right? You understand what type of structure this thing is trying to make. And if you understand the type of structures, which means you have to study those structures, you have to understand how they work, you have to understand what they look like, you have to know how to find them and identify them in the chart on all time frames. And if you can do that, you don't need to put a lot of square boxes in your chart because they're a waste of time. Now, I'm only talking about ideas, not about people. What we discuss in here are ideas. Are those ideas good ideas to trade or are they not good ideas to trade? And I think they're not good ideas, and I'm showing you why I think those ideas are not good ideas to trade. I can show you why support and resistance are not good ideas to trade. I'm pretty sure a lot of you have seen it. If you're 1911, if you give me the $1 billion to trade, I'll be trading $1 billion. You want to do that? You want to make an offer? Give me $1 billion to trade? Come on, we have a deal. Give me. I can show you that I'll make it. I'll make a lot of money for you. You don't have it, right? So don't ask a question that is, literally not making sense. You know that question doesn't make sense, right? So, by the way, it's not about people working in bank or people. It's about ideas and trading. Bank doesn't trade the way we trade, so don't fool yourselves. No bank is trading the way that we technical retail traders trade. We trade different from them. You don't walk into a bank and say, I want to trade $1,000, and he says, hold a second, we can't do that. We can't buy the dollar from you now because dollar is in a downtrend. And we were expecting it to go down somewhere, so we're not going to buy dollar from you. Does that happen to you? You walk in the bank and they said that to you? No, they won't, right? They will take your dollar. And if after they buy the dollar, you want to take the money and rebuy your dollar when you sold it to them, you want to rebuy it, they will also sell it back to you. Right? It has nothing to do with the bank system and the way they work. It has nothing to do with how we trade technically. So if you believe that, you probably have very little understanding of how they work. Right? So that's not how they work. How significant is supply and demand zone? It's significant, but I don't look at currency trading as such as supply and demand. Here is why. Commodity, that terminology in commodity is very good because commodity for a period of time is limited. It's limited how much car a factory can produce. It's limited how much produce you can produce on your farm. It's limited how much apple can be grown on this time for this period of time. Believe me, the amount of currencies that can be exchanged up and down is not limited, right? So you can't look at currency exchange in terms of supply and demand. It's not like we grow currency and then we eat it and then we wait for a next set of currencies to grow, right? The circulations of currency is constant. So if a bank needs the next $1 billion to borrow, they will probably borrow it and trade with it if they need it, right? If they need the next $2 billion, they will borrow it and do it. So there is a shortage of currencies, right? It's in constant circulation. So in terms of trading currencies with supply and demand, not so much. You can say that there is a demand for dollar because everybody thinks dollar worth is going to go up. But there's no limit of the amount of dollar they can give to you. You follow what I'm saying, right? It's not like the dollar is going to finish if you don't buy your set of dollar now. Or everybody buy their set of dollar and there's no more dollar in the market, right? That doesn't happen. These changes of prices and currencies are based on other factors, economical factors. They're based not so much on demand, on speculation. I would say more speculation than even economical factors. Because you see a currency drop like the rubles. You see the ruble drop 5 rubles a day. Believe me, from yesterday to today, that the ruble dropped 5 or 10 rubles, zero economical change. Nothing changed in the country. And within a couple hours, it dropped by. That's pure speculation. It has nothing to do with the supply and demand of rubles. It's pure speculation. So you can use it, but I don't see how I can use it. That's why I don't use it. What are the chances of the reversal of an impulse when the structure is complete? That's a very good question, by the way. How do you identify that an impulse is going to reverse? How do you know an impulse is going to reverse? When the pattern that the impulse is in is completed, and if you know those patterns, remember what I said, if you know the structure, you understand the patterns, you know when a pattern is completing itself. So when a pattern completes itself, that impulse will definitely reverse. And a pattern always completes itself in an impulse. That's a very good question, by the way. The pattern always completes itself in an impulse. And the new pattern always starts with an impulse. When market closes, nothing. If I'm still in the trade and I like it and it's a good trade, I still keep it. The market doesn't. I'm in silver for more than a couple months now. I do nothing with it. I just keep it. I still have a view that silver is going to go up. Technically, I'm still see silver is going up. Holidays all during the weekends and the New Year's and FOMC and everything, and I still keep my silver trade. I don't hedge. Hedge is very dangerous. Hedge is locking in your profit or loss. When you hedge something, you locked in your profit or loss, and it becomes very tricky to exit the hedges. Actually, you end up losing more money. I tried it before, and I end up losing more money because I closed the hedge because I think now it's going to go, and then it turn back, it correct up, and then you mess with the hedge more than you should have done. There will be, yes. And the Aussie chief, somebody is asking if there will be a chance to pull back. Very likely. I think there'll be. They always pull back, so you always have a chance to enter. You don't really miss anything. Euro, my view in euro from the start of this week was it's going to go up, and it's going up. So let's see what it's doing. What else? What else? Let's see some good question. I'm trying to roll through some good question. With which broker are you trading? That's not important, but I use Dukas copies. I don't use it because I want it. That's where my investor has his money, and he opened an account there and he gave me to trade. That's it. May I ask how, when you enter the trade at Bank Chief, please, are you waiting for a retest of upper trend line? No, I'm waiting for a corrected structure. I just said I'm waiting for it to consolidate a little under the trend line, then I'll take the trade. Why is support and resistance not good for trading? Viewer 1910, you never seen me show you the magic of support and resistance. Let me show you. I guess a lot of you didn't see it, so let me show you. I'll take everything out from this chart. Anyway, let me don't choose a chart. Tell me which charts you guys want me to choose. I'll show you how to look at support and resistance on that chart. We can even take a chart that I never saw before. Let's go with one that I never saw. Which was the one we used yesterday? Or let's use any one you guys want. Give me a chart that probably I don't have on my list. Yes, use the USDTRY, right? I think I had that on my list. I wasn't sure. Let me see if I actually wrote it wrong. Let me just get that back. It's USDTRY, right? Sorry. Oh, the Turkish. I think I had that, before. I didn't do a lot of work in it, but we had it. Yeah, I had this. It's almost. Anyway, no problem. Let's take everything out from here. I don't trade it, but I did it for somebody. I think somebody from Turkey called me and asked me if I can do it for them, and I actually did. So I'll put it in a 4 hour, and I'll move the chart away from the screen. Right? I don't really want to see it. Let's move it away from the screen, so we don't know where it is, and we're gonna put support and resistance. We're literally going to put support and resistance on the chart. Normally, you will search for it, right? You'll take a long time and search for it. Do you like it here? Let's put one there. Should we put one more in the middle here, or is that okay? That's okay. Let's put one at the bottom here. Let's push up the chart some more and put some more. Sorry. Uh, let's move the chart away because I saw a piece of the chart. I don't want to see it. Let's put some here. Those are support and resistance. Now we're going to go and see how they work. Right? You want it more perfect than this? You see how they found that support and they bounced off of it? You see how they come close to that one? See what happened here when they found that resistance? You will see what happened here when they found the support. See what happened here when they found this one? Right? Let's go. You see this here? See how perfect they found that? This was a strong resistance. The big bankers know this resistant line was here, right? They actually I just called them and they told me, and I said, let me put it right there for them. Right? Let's go. Perfect, right? It's almost perfect here. It's even better here. Let's go. Look at these. They're perfect. You don't want them better than that, right? And you know why? You know why they're perfect? Because it's nonsense. The reason they're also perfect because it's pure nonsense. You're putting a horizontal line. Let me show you something that is simple. Here is the magic. If something is going up like this and you put horizontal lines in it, the chances are it's going to break it, it's going to bounce off of it, or it's going to stop and turn from it. The chances are like 90 to 1 you're going to have it perfect, even if you don't look at it and put it. What do you do when it comes to the line? Nothing. If you can just put a line on the chart without watching on the chart and it's so perfect like this, to the pip, look at this. I didn't even look at that. And if you can just guess your way and put a line on the chart and it's perfect like that, that line is useless. Right? If you can only put a chart, I mean, you want it better than that? And look at this. They used it here, they used it here, they used it here. It's as if I know they were using it there, right? No, I don't know. You can just guess and put them anywhere and they will be perfect. Because you know why they'll be perfect? You're not looking at this piece. You see, they're all useless here. The chart is going up and it will continue to go up. All your resistance and support lines are useless. You're in an impulsive wave going up. There's no need to put horizontal lines in there. And the reason they may look like they're support and resistance in here is because you're in a consolidation here. It's going up and down, and there are chances it's going to bounce off one of the lines. That's all. You still want to use those horizontal lines? Keep using them. They're useless. They're absolutely useless. If trading was as simple as putting horizontal line in a chart, we'll all be millionaires. See that? I just said if you want, I don't have a daily paid service. I don't charge people a subscription fee for anything. You pay me once for the training course, and you have free access to the group for the rest of your life. You don't have to pay a single cent after that for the rest of your life. No subscription fee. So you pay one fee to learn the stuff that I have, and the rest of your life you will learn it for free. Skype me for that information. Let's not discuss it here. Skype me. I just gave you my Skype. You can find my Skype all over. Let me just give it to those who missed it. Let me give it back again. And let's not come back to that topic, right? It's MANGAL 457. Write it down. Let's not come back to that topic. Right? What else? Let's go to some questions. We have a millionaire in here. Great. You can contact me and send me a couple $1 million to trade. What else? Is there a way to use the MACD to identify an impulsive wave? There probably is a way. but you'll have to take the course to learn that. I like this question. It's pretty smart, right? And you know why most trading gurus don't tell you that it's nonsense? Here's the deal. All of you here from TradingView, right? Most of you from TradingView. And most of you remember the argument we had on support and resistance, right? When I said I actually did a whole webinar on it. And it wasn't support and resistance. I think it was support and resistance. And I said it's nonsense. And one guy came and said, well, it's working great for me. And guess what I did? I said, show me. I said, show me. That's it. Show me it's working great for you, right? And that's it. A big argument start. All you had to do was show me, hey, what are you talking about? Look, it's working great for me. Look at my account here. The guy couldn't show that it's working great for him. Full stop. No more argument. But he keeps trolling the chart. And I said, okay, let's get over it. It's over. Unless you have something to show me, it's over. And everybody, the moderators keep calling me. You can't demand for people to show you their account. No, I'm not demanding it. I never asked for him to show me his account. I asked for him to prove to me that support and resistance trading is working good for him. It's not working good for him. That is why he has nothing to show. Trading this strategy about 3 years now. I've been trading. I started like about 5 years, and after I realized nothing else is working, I tried support and resistance. I tried moving averages. I tried support and resistance. I tried. There are a lot of people a lot of traders are here who were with me, with the guy who trained me. That's what he used to teach us, support and resistance. That guy would take half an hour to find one of those lines, support and resistance line, right? Most of you in here, probably some of you in here, I saw, like somebody was asking if Paul is in here. Paul is not my student, but that's not the same Paul. But we all went through that thing, and it was pure nonsense, right? There's a lot of traders in here who knew what I'm talking about, right? It's pure nonsense. It didn't work, right? I don't provide copy trade, but one of my traders do. Victor in the room. Victor, can you post your link for copy trading? We have some people who want to copy trade from you. He trades better than me, by the way. Victor has a 100 and something percent, and I just, Victor is not. Can somebody post Victor's link for copy trading? He's private now. Okay. He's sick right now, so I'll talk to him. He'll post it out for you guys. Oh, Jeffrey's asking a question. I heard you said you have a unique way to. Maybe if you take the course, you will know what it's linked to. That's the only thing I wouldn't tell you, because that's something we have on our own. I'm using a wave theory strategy based on Elliott works. A lot of Elliott work is there. We use the same patterns Elliott used. We don't change them, because pretty much Elliott did amazing work in showing us those patterns and how they work. The problem with most traders is they can't identify the patterns correctly. And that is something I've learned to do, because I've learned to identify what is a wave. And if you know what is a wave, you know how to count 5 waves. If you don't know what is a wave, you can't count 5. If you don't know what is 1, how do you count 5? Right? Some of you saw a guy post in my chart an A, B, C, D, E, right? And I'm looking at it and I'm smiling, because I didn't want to answer it to him, because it's just total nonsense. That's not even close to what an A, B, C, D, E pattern should look like, right? This is what an A, B, C, D, E pattern should look like. Let me give you an idea. If you're going up in an impulse, you have an A, you have a B, you have a C, you have a D, you have an E, and then you go up. That's an A, B, C, D, E pattern. It could be expanding or it could be contracting. And those are the only patterns you should use A, B, C, D, E on. If you use them on something that is going like this, you probably have very little understanding of Elliott wave. And that's not something I would even comment on. It's a waste of my time, because you're not even close to understanding Elliott wave. So we are discussing different things on different levels. So I would not even comment on it. Why not trade the industry? I will when I have my next account. I'm missing some questions. How much effect? I like this question. How much effect does the stuff happening in North Korea and China applies to currency? I don't know. I have no idea. I mean, honestly, I have no idea, and I think none of us have any idea. Absolutely. Any one of us trading retail traders trading currencies tell you they know. You know what they're doing to you, right? I don't have any. I don't even know what's going on in North Korea and China. Honestly, I know North Korea said they explode a high a nitrogen. What is the bomb they actually explode? This hydrogen bomb or something like that. I'm not even sure what it is. Yeah, hydrogen bomb. I have no idea whether they did it. I have no idea what that is going to have. I don't care. I will care less. I'm looking at structures in the market. What has that got to do with us? But you will see people use that. Some people are going to use that to say because of that, this is happening or that is happening. It has no connection. It may have a connection. We don't know about it. If it have or it doesn't have, we don't know. So don't waste your time trying to figure out it. What you should do is focus on the charts. And that is what I tried to show you. If you look at the charts, the reason it's successful is because I don't waste time trying to focus on things I don't know. I focus on things that I've tested and things that work. And things that you've tested and have worked is simple. It's patterns. They work. If you test them and you know them, they work. That's all. Now, what are the reasons? Maybe because of Korea and China, these patterns are working. They're doing what they're doing today. Maybe because of that, CAD is coming down, right? And we all want to trade CAD to the downside, including me. I want CAD to the downside. I wanted this trade, right? I've been looking for this trade for a couple of days. Maybe because of North Korea is going to come down. I have no clue. I have no idea why it's going to come down. But I've been looking at it for the whole week, and I said I want it to the downside. As soon as they break and they make a correction, I would be in that trade. And I would care less what happens in North Korea. I mean, honestly, guys, why imagine things that tell people things you don't have you know you don't have a clue about. I looked at the news just like you. That's all we heard. You guys are funny. I don't know. You have to ask the people in the U.S. I'm reading the one if Donald Trump's become president of the U.S. will go. I have no idea. But I like the question. The question if Donald Trump becomes president. I have no idea. Could be, could be. Aristotle was talking about Japanese why the yen is getting stronger, getting weaker. You guys don't focus on those things. You'll be wasting your time. Fibonacci? Okay, that's a good question. A few words with Fibonacci. Why? What do we use Fibonacci for? We use Fibonacci to tell us where the target is going to be, and we use it to tell us where it could retrace to. But Fibonacci itself, by its own, is not what we use. What we look for is the patterns. And if the patterns come back, if the pattern is completing itself at a certain retracement fib, we would be in that trade. That's what we do, right? Now, we always look for a certain target because we have tested it and we have a 90% chance of hitting that target. And when I said 90%, I mean 90%. If you put your Fibonacci correctly, the problem with most traders is they're putting it incorrectly. There are actually rules on how you should put that. And if you put it correctly, you would be amazed of how often they go to that target. And I'm telling you about a 90% chance of hitting that target if you put them correctly, if you know how to do it correctly. Because if you don't, you're not going to get it. We hit this 270 target. You see that purple one? That's a monthly Fibonacci target. And that thing had a chance of getting hit 90% of the time. That is, you fib this one here, and you can expect this move to go and hit that 270 90% of the time. And that's what they just did. They actually just hit that 270. That 270 gets hit very, very often. We always say 90. I believe it's much more than 90, right? And it's on any time frame, absolutely any time frame. It doesn't have it's not regulated. Why that happened? Don't ask me. I have no clue. I absolutely have no idea why that happened. But it happens. We have tested it and we know it happens. No, we wait for the structure. Somebody asked, do you open your trades on the spot or after you read the charts or wait for a right time? No, we don't wait for time. We wait for the right structure. We wait for the completion or the breakout of a certain structure before we enter a trade. It's more about the structure, not about the timing. Do we think volume is in any way useful? Mm, Depends how you're looking at volume and what you're looking for in the volume, right? It is useful. I use the MACD for volume. I know there is a volume. I know a lot of people are using, they have a volume indicator. I've never used it. And I think it has histograms that goes like this in it as well. And they have the volume indicator. I don't use that because I don't know how to use it. I'll be honest to you, and I've never tested, so I can't comment on that. I can't comment on how that works. But for volume trade, right, when volume is dying out, we use the MACD to tell us that. It's volume. It's more momentum, not so much volume. And momentum is dying out, I should say. Well, momentum dies when volume is not there, right? So it's kind of like if the volume is dying out, momentum dies as well. What else? Uh, Somebody said the wave theory is applying. I don't know what if that's not a question. I don't know what you want to ask. You have to let me know. Anil, buying XAG between 13 and 14. So it's always a good idea to buy some silver, man. You could buy some silver and gold and keep it. Nothing goes wrong with them. They don't spoil. But buying silver around 13, 14 is always a good idea because the price is cheap. Yeah. What is my MACD properties? It's standard MACD. I don't have anything magical, guys. Let me, I know it would be nice for me to tell you that, hey, that's a secret. It's not a secret. It's a standard MACD. It's not about the MACD. It's about how you use the MACD, right? People like to change that thing by one or two thing, and they come up and they sell you that thing. I actually saw, this is not a joke. I'm not kidding you guys. I saw guys selling a MACD tool to people for $20. He actually took out the histogram and he leave the moving averages. He colored them and he colored them green and magenta and red and pink and a whole lot of and he was actually telling these people he created this amazing tool that when it shows you divergence, it actually turns. And I was like, but that's MACD, right? He was like, no, 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 I created this tool on my own and we spent hours, thousands of hours creating this. We had 3 specialists creating it. And he keep repeating it. I said, but that's MACD, right? Okay, if it's not MACD, it's probably RSI, right? Because you have those tools already. You have MACD, you have RSI, you have stochastics. You can use any one of them. You can use the awesome oscillator. All of them will show you divergence. And the guy was like, you got, they blocked me from asking questions because I keep asking the same question, right? It is one of these tools that is showing you divergence. Why should I buy this tool from you? It's showing you the same thing. He actually sold a whole lot of it for $20, right? Immediately. Because traders coming in, hey, wow, yeah, look at that thing. It turned there. I want that tool. They took it, put it in the chart, and lose some more money because they have no clue how to use it. It's not about the tool. It's about how are you going to use that tool. That's the important thing. So it's standard MACD. Don't worry. We don't have any secrets in that. Okay, guys. Any more questions? If no more questions, we'll call it a day. I will see all of you guys tomorrow in London. Please share the link, check the YouTube video, and don't forget to share the link of the YouTube video too. Invite a friend. If you like what you hear, invite a friend over, right? What topic you guys want to look at tomorrow? We can look at 2 more topics, one in the London and one in the New York session. What topics you guys want me to look at? Before we go, you guys could just say what topic you want. Let's go on a topic. Patterns. Patterns is a long way. It's a whole 6 weeks. Let's go with something simpler like what? Giving you waves. Okay, I could talk a little about wave patterns if you guys want, but it's you will not get much out of it. Yeah, we'll do some patterns. I'll just show you some patterns. That doesn't mean you'll get the course, right? So I'll see. I'll find something. I'll find something nice to talk about, right? So I'll see all of you guys tomorrow. Thank you for coming. Have a nice day. Trade with care. Thank you. Bye bye.